Let's start with our stock of the day. Is in the small cap space, market cap of around $1.5 billion. It is ARB Corporation. Shares soaring today. The company has reported a 5.2% decline in FY26 net profit, with sales lower over the year. In fact, lower new vehicle sales in the four-wheel drive segment had hurt sales in the aftermarket sector. That was in the 25-26 financial year, along with tighter consumer spending. But ARB is saying the increase of large vehicles in Australia will provide opportunities into FY27. The auto parts provider saying it's sitting on a solid order book, being positive on its export markets. Also says it has $48 million available in cash and no debt. So, what do our experts think of it? Luke, let's start with you.
Yeah, look, this is a result that goes to show reporting season's all about expectations and results relative to that, because headline numbers, as they have been for ARB for a few reports now, are pretty underwhelming. I mean, revenue down about 4%, that underlying net profit down about 10%. But it's all relative to that chart we've got up on the screen. The share price has certainly, factored in all of this weakness through the consumer, through the sort of shift away from your Fords and Toyotas to, in particular, the BYD Shark is taking a lot of market share and sort of taking away from that core ARB market. So you factor in that sort of valuation crunch. The fundamentals, still struggling, but not horrendous, and management sort of calling out, as you said, Andrew, some green shoots starting to come through, and perhaps some optimism into FY27 that earnings growth can resume. And all of a sudden, ARB, a company that's historically traded on 25, 30, sometimes even 35 times earnings in the past, trading back on around sort of 16 to 17, it looks much more reasonable. And, with the market maybe getting a bit more optimism about growth into the future, we see the sort of reaction that we've got today. I wouldn't necessarily be running out and chasing the stock. I think you'd hold it here. It does look like, we're through, hopefully, that sort of peak sort of cyclicality where that post-COVID bump that these guys had for a couple of years is now unwound. And, maybe the issues with deliveries and Ford and Toyota management, what they're seeing is starting to sort of recover there. So I think there is genuine optimism there. But, as I sort of said, that valuation, I think, is just a fair price, sort of around that 16, 17. I don't think it captures the big market premium that it had of a few years ago. I think it's a pretty long, slow grind. You're probably likely to get your returns from incremental earnings growth and some, dividends as well. So I think it's a hold just on that valuation basis, but good to see that the fundamentals are starting to turn here.
All right. Francesco, margins have been stabilising. US business looks to be accelerating.
Well, I think what the markets is focused on here is the second half recovery and looking forward into FY27. Look, it is discretionary spending. It's all about four-wheel drives, I suppose. There is bits and pieces hanging off the edges, but having sales internationally, and we saw last year they hit record sales, but didn't do much for the share price last year, and sales are a bit lower this year, but that was due to the first half. I think the market's looking past it and going, well, international sales in discretionary spending might pick up a bit. It is trading on about 21.5 times after this share price movement. So it's still, in what Luke's saying, it's probably relatively inexpensive. There's some earnings growth into next year, brings the PE back to under 19 times. So it's starting to look more and more attractive. Our analysts have a buy on it. Look, I wouldn't be as strong as that, but I don't mind it. I'm just a bit concerned around the discretionary spending side of things. A stock we don't cover at Ords, but I don't mind in the motor vehicle parts and accessory space is Motive. It's had a pretty rough trot over the last 12 months as well. But what I do like about it, it has a fair bit of non-discretionary automotive parts in it, brake pads and filters and things like that, which are necessities for maintenance. So whilst, yes, we do like ARB and, we have a buy on it, I don't disagree with that. I wouldn't go as hard as that. I think a Motive probably going to give you a better yield in the medium term, though.
All right, I might call it a double hold then, despite perhaps what Ords has got a buy on it, but obviously, look, also a hold. That is the view on ARB Corporation.